So the big headline for 24 on the economic side was no recession, exceeding expectations. And you finish Q4 with a Trump win, which juices animal spirits, right? We saw small business confidence surveys hit 3-year highs. Consumer sentiment is elevating. Retail sales trounced last year's spend. Okay. So animal spirits are on. And you can see that in the data here across every time frame. Now, what's misleading about this, by the way, how you interpret this chart is animal spirits really took off end of September through year end. They had been a laggard, actually in the red up till then, but their performance was so strong that if you look at across timeframes, it looks like that they've kind of always been doing well, but it's really a recent phenomena. You can see that here, actually. Here's the animal spirits chart. So around mid-September, as the market started to get more clarity on the election outcome, you could see animal spirits rip, right? This is November 3rd. It's around the election. And here was the Fed. Fed was a little bit later after that. And animal spirits are getting quite frothy right here. This is a trend neutered kind of 2 standard deviation top and down way to look at animal spirits. And this other factor, volatility factor, this is getting overextended. By end of day today, this should be at the 2 standard deviation level. The growth factor has been pulling back, even as the market's been going up, actually. Momentum factor had sold off. This is why names like we own App, for example. App had a pullback because it's exposed to both momentum and growth factor pullback. But momentum set up potentially to recover soon. It's oversold. These names, highly shorted stocks, are overbought. I made a comment earlier today to watch out for these junky names in IWM, even junky biotech stocks, because that's not good when you see this happen, right? So there's a lot of nonsense rally that happened Friday and today. And those usually look to these sharp, quick, and furious rallies that last 1 or 2 days, and then they give back. I think you're going to see that. And then you have here earnings yield. This is the equivalent of like value. The entry points and value are very strong, like right around now. And here we are heading to bank earnings season. So it's a great setup for the banks. That's a tool that I use to focus on the right categories and not chase what happened, try to stay ahead of the curve and own factors and themes that have good long-term earnings growth that can get in at a fair valuation that identify the leader, or maybe it's a set of leaders.